Welcome traders, David DeBay here, Polaris Trading Group. In affiliation with Infinity Futures, this is our weekly review preview for the upcoming week, June 19th through June 23rd. Industry regulations require that we highlight NFA Compliance Rule 2-29, which simply states in summary that the hypothetical performance results have many inherent limitations. Trading in futures and derivatives on futures is speculative in nature and involves substantial risk of loss. Past performance is not indicative of future results. So with that, let's get to our charts and see where some of the action has been this past week. Okay, on your screen you should be seeing a performance chart of the S&P sector ETFs. This is typically what we look at week over week to see where the general action has been. And using the ETFs, sector ETFs, is a fabulous way of just taking a quick glance and seeing where the money has been flowing back in and out of various sectors. And as you can see here, the baseline is the S&P 500, and you can see here in green, technology had a down week. The Dow Industrials had an up. Material sector slightly down. Again, as you can see here, energy slightly up and vice versa. Back and forth. Consumer staples, healthcare, utilities, and financials had a minor up week. So all in all, the general look of the sectors is mixed, with a slight edge to the defensive side. Looking over at our relative rotation graph, and again, this is something that is available to subscribers over at stockcharts.com. So if you're interested in this, please take a look at that. What this shows us is four quadrants: top left improving, top right leading, bottom right weakening, and bottom left lagging. So what this essentially does is it places the various market sectors and groups into a category, whether it is leading or lagging, improving or weakening. So as you can see here, our NASDAQ at the NDX index has been, of course, in the leading group for quite some time, although we had a little crack in the pavement this past week or so, this past week Friday, with a little bit of a sell-off there. So we'll take a closer look at that momentarily. Utilities still in the leading group, but seems to be losing a little bit of steam, and that's a good sign, because we don't want utilities to be really in the leading sector, because that's a little bit more defensive. What we want to see is we want to see some of these other groups that have been in the lagging group: transportation, small caps, Russell, mid caps, etc., that have been in the lagging group. But if again, you can see the trail of their history. So their history now, we've been talking about this past couple weeks on these videos, that there's been improvement in these sectors. So that's still a continuing theme overall for the transportation, small caps, and Russell. All right. Again, NASDAQ, there seems to be a little rotation coming out of that, some of the high beta NASDAQ names, and some of the more core Dow Jones Industrial type names. So you can see this transportation index, all right, has been rising. Let's take a quick step back here, go back to the sectors, and the most leading group has been the Dow Industrials. Okay, so that's the 30 Dow Industrial stocks. So again, when you're having the Dow Industrials lead with support of the transportation, that is a good sign overall. So there is some rotation going on. And just one thing about rotation, guys, remember, this is a market of stocks, all right, and it's sectors. So the market, these money managers move around their portfolios. So it's not, the market just doesn't all sell off in one shot. Money comes out of one group and finds its way into other different groups. So this is important for us to remember when it comes to viewing, the overall action in the market. All right, let's take a closer look over the past couple weeks in the S&P 500. We have now moved over to the September contract, right, and this is a merged profile of the history from the June contract over into the September. So a couple things of note. where there is a new yell, the YELL. Now, what the yell is, for those that don't know what that is the first price at 2 o'clock Eastern Time when the Federal Reserve makes their policy announcement. So the price was at 24.3650 at that moment. That was basically the first tick. So that's what we call the yell. It is basically a benchmark, and it tells us where the market was when the Fed made their most recent policy update. Okay, so that's where that is for this current cycle until the new yell is created. So going back a little bit here to the left, you see this white zigzag line. This was a longer term point and figure target that we had placed on this chart a couple weeks back, and as you can see here up near the highs, the price has been rejected a couple times here, all right, at that level. So that 42-ish area, 44 zone now is what we would refer to as our supply zone. Okay, so for the past 2 weeks, the market's just been kind of back and forth, back and forth. We had a couple days where we had that last week, a week or so ago, we had that big downdraft with the NASDAQ, and that's what pushed down. That's this wide range bar here, and then it recovered. We had a spring off of that level and recovered back up, retested the highs, and then this past week has retested this demand zone. Now, our demand zone now sits between 24.14 and 16. The midpoint of this wide lateral movement here is approximately the 28 handle here, 29 handle. So keep those things in mind, those levels. And the major key support we're going to mark here at 23.96. It's actually a zone between 23.96 and 23.98. So we can just add another line there. All right, so this is basically becomes our key support zone in here should the market come back down at some point, test that. So coming into this coming week, we're going to take a look at some of the key levels that we want to be watching for. So when we have a sideways lateral movement, all right, a lot of the action is hung out around the midpoint of the A zone. As you can see here, a lot of these daily profiles have been kind of oscillating around this 28, 29 handle. Again, aside from a couple moves up, a couple moves down, pretty much this has been the balance zone in here. So for the bullish case coming into this coming week, we would like to see price on the S&P hold above this 28-29 zone for a more significant sign of strength. All right, so again, right now most of it has just kind of been oscillating around that, really kind of meandering. But if we can see some resolve on the part of the bulls to hold price beginning, during the week sometime above this 28, and then work their way, work its way above this 36, 38 zone, that's going to be a very bullish sign where we could get the next move to the upside. On the flip side, all right, the converse. All right, so if the upcoming week shows further weakness, all right, on its way down below this 28, we'll probably have another test of the 24, 14, 16 zone. And again, should that break, all right, we got a minor level at 24.06 and then down to the key support zone between 23.96 and 98. So we're going to keep a watchful eye this coming week on these areas here. Again, options expiration, we had a quadruple options expiration this past Friday. That's over. We have contract rollover is now complete. All right, so now it's going to be, the market's going to be pretty much on its own to decide what it wants to do heading into the summer months. All right, and again, summer will be beginning officially this week on the 21st. All right, let's take a look at the NQ for a moment. All right, so the chart here is a daily view of the NQ, again, September contract. And simply what I've done here is I've put a channel depicting the current overall larger degree uptrend, which by the way is still in effect, though we've had a couple of these wide range down bars. All right, one back here in May, which recovered nicely to go on to make new highs. This recent one, which was about a week ago, all right, has not responded. Price has not responded in the same fashion. All right, so something different is beginning to occur. We did highlight this last week. All right, and we're gonna it's duly noted to do it again. Again, the overall trend is up. All right, but you can see these long tails. So the sellers drove price down all the way down to these 56.50 area, and then at the end of that day session, the prices, the bulls had driven prices back up. So which is creating long tails. All right. So now these two long tails down here, which is approximately right around the 56.50s, all right, is really going to be a key significant spot should the market come back down sometime during this week or in the near future to retest those. Now, on the upside, all right, though we have an upward sloping, we're starting to find some resistance coming in at about the 57. 75s, all right, near to the 5800. So there's a high volume notch there, volume that you can see here near that 5800. So that Thursday's candle, they pushed up and reversed it. It wasn't quite a doji, but it was a wide range day nonetheless. So for the bulls, what they'll need to do is find some resolve to hold above this 57.75 5800 area, and if they can do that, then they can look to recover back up near these highs. Now, a lot of people are saying that the market, in the Nasdaq has a change of character. Clearly, there is some level of a change in character, but the highs are not made in 1 or 2 bars or in 1 week. There's usually a back and fill process. So I still expect bargain hunters to come in. Especially if there's retests of these lows once again, and then try to push their way up back above 5800. If it does stall up into this area, 5800, anywhere above 5800 is pretty much where latecomer longs have been trapped. So that's why I say this little high volume notch here is expected to have some resistance there. But if the sentiment changes and the tech stocks come back into vogue where the buyers, are seeking higher prices and view this as value, then we'll see higher prices. All right. Again, it's always a tough call. I don't try to make any predictions. Just try to really outline and frame out for everybody where the key levels and inflections points are. Well, we'll do our best intraday in our trading room and our daily trade strategies to hone in on the specific levels and in ideas and cycle days for that particular contract. All right. All right. Lastly, for the upcoming week, again for Monday, June 19th through the 23rd, the calendar pretty much is relatively light. Typically, after the Fed, we get some Fed speak throughout the subsequent weeks. So we have certainly that Fisher, Rosengren, Kaplan, Dudley, etc. So they'll be talking throughout the week. But for the most part, the calendar is relatively light. We'll have weekly jobless claims, and again another Fed speak there late on the next Sunday. New home sales on Friday, and that's about it. So we'll take a look at what this week will bring for us and be prepared as the summertime begins here on Wednesday, June 21st. Okay, so lastly, if anybody that has not taken a free trial with us, we'd love to invite you to come visit with us for a couple weeks. And all you need to do is go to www.polarisTradingGroup.com/free-trial, as you can see on your screen there. Come in, sign up for a free trial, take a look at what we do. You'll get a complimentary daily trade strategy report as well during your trial period. We will have an upcoming live trading webinar on June 29th, so we'll be sending out notifications to everybody on that and details. And I believe Infinity Futures has sent out a notification on that this past week for you to pre-register for that webinar. That will be June 29th, a Thursday morning at 10 a.m. Eastern, 9 a.m. Central Time. And for any additional information, you can certainly reach out to me at david@PolarisTradingGroup.com or contact Patrick Zielbauer, your Infinity Futures representative, if you have any further questions regarding this video or any services that we may have. All right, thanks very much for your attendance, everybody. Again, happy summer as summer begins this week, and good trading to all, and thank you for tuning in this week. We'll see you in our trading room.